Where are we on the spectrum of chrysometer at Nutmeg?
Well, I think if you look back to last year, European political risk was completely priced out of equities and out of European markets. Now that's coming back. I think it's going to come back quite quickly. Of course, it wouldn't take much for Italy to be downgraded, and then the ECB can no longer buy Italian debt, and then we're into a whole different ballgame. I think our greatest issue at the moment is that the latest moves have really empowered the five-star movement and the League to really go out and say, actually, this is us versus Germans, this is us versus Brussels, and to really empower them to go even further and actually really push this agenda against the EU.
With that in mind, do you think that we've got more room to go on the spreads? I was looking at the spreads. We're almost at 240 basis points on Italy over Germany, and similar kind of story for Spain. We'll come back to that in a moment. But in terms of these spreads, let me just clean up the chart. We don't want you to have a dirty chart. How much more of a blowout is there to come in spreads?
I think quite a lot, really. I think it'd be interesting to see what we get from the ratings agencies. Clearly, the coalition can't put in place their spending plans. That I think, would have led to a much faster downgrade. But clearly, Italy debt is on watch at the moment. So it's interesting to see what the next move comes from the rating agencies. And if, as we expect, we get a downgrade, then clearly the spread can go quite a bit higher. I wouldn't be surprised if there's a bit of a relief rally, because if you think about the news over the next 4 months or so until we get an election, there's not going to be too much move on the fiscal side.
I mean, my guests thus far this morning in Daybreak Middle East and in Daybreak Europe have said, look, it's not a solvency crisis. It's not the kind of crisis that you had before, because we're in a better shape. Would you agree with that? Because there's not much distance. There's not much distance between a miniature crisis, which is what we have at the moment, political crisis, turning into a solvency crisis. I've seen that firsthand.
Yes, it wouldn't take much. Actually, if you imagine the case where Italy's downgraded, it no longer has access from the ECB buying the debt. Who is the marginal buyer of Italian debt? Now, the Italian fiscal position has improved, but if you see the spending plans being put in place, that's a massive bump, a massive increase in the deficit. And who is going to fund that deficit? Where is that marginal buyer going to come from Italian debt? So you can see spreads blow out very quickly from here.
Does it shake your confidence at all in the European equity story? We had a CIO on this morning from Credit Suisse during Daybreak Middle East. Very, very effusive about the growth story, the tailwinds, the good news story in Europe, and that would come to bear later in the year. And to that end, he actually felt that the ECB might make some moves earlier than we all anticipated, and that it's quite good news. Would you be shaking in any of your European conviction calls at all at the moment?
Well, we've been underweight European equities for some time. We've been unconvinced by the recovery story in Europe. Yes, we saw a lot of really good soft data coming through, the survey data in Europe, but actually the hard data didn't really follow through, and we've seen quite a big disappointment on European data so far this year. So we've been underweight European equities, and it's really interesting. Since the French election, European stocks have underperformed Japanese stocks, which, again, are very much a high beta market in global markets. And so I'm not really convinced that the European story is here. Earnings momentum isn't that strong compared to other regions. So we're unconvinced, and actually with political risk being priced back into markets, I think it's a good place to be underweight European equities at this point.